What's up, folks? I hope you're all having a blessed Saturday. And something we've been watching, or I've been watching, if you've been following me for many months now, almost half a year, has finally come to a resolution. And so this is a pretty important moment because, 6 months is a long time for a pattern to develop. But here we are. So let's get right to it. And that pattern is none other than the Wyckoff distribution, which as I've been sharing both on X and also on my Discord, that we were in, and this goes all the way back in November of last year and even earlier than that, where I pointed out that what I had called out before the tariff crash in February of last year, which also was a Wyckoff distribution, and I said we're gonna, and then we did crash. I pointed out in November of last year that we're doing a similar distribution top after which we would crash. And that's quite a long time ago. That's many months of watching how this thing unfolded. But here we are, and what happened as we got into yesterday's session was, and this is something I posted on X, that we would have a perfecting ending to the Wyckoff finally after many, many months from October all the way here in March. That if we would gap down underneath the 200 SMA and try to break down outside of this rectangular box. And I said that that was likely outcome based on what I was seeing. And this was earlier in the week on the 19th. And so fast forward to what we were watching, this bottom of the rectangle had been support going all the way back to October when I started watching this. Then we hit it again towards the end of the year. Then we hit it again earlier in the month. And then we hit it one more time. And so this support, after multiple attempts of breaching, has finally come to a conclusion because we breached it and we went underneath the 200 SMA at the same time. So if we look at this, you can clearly see the breach here, which is what I posted on the thumbnail of this video. This is not a questionable little breach. I mean, the full body on this is on the ES, and as you know, I look at the ES for the reasons I mentioned many times in my videos before. The body had a full breach of the rectangular box. So we finally had that. This wasn't a body with a tail that shot back up into the box. This is a full body breach. And what that means is that this Wyckoff distribution pattern, which I said we were in the LPSY for a couple of months now, as essentially the big boys were unloading to the retail people at this nice price range that they can't unload too quick because it'll crash and then the price is too low. So they don't want to do that. They want to just unload enough to keep the prices at this elevated level as they unload their inventory to the retail people. And they've been doing that for half a year, basically, just steadily selling into retail who kept buying the dip over and over and doing it in a way which the prices at which they could unload was at this nice elevated level for them to get a good price to unload their inventory. But what we've seen lately is that they've been unloading more and more because the retail buyers are disappearing because they're pretty much all in already. And so as a result, they're starting to unload more of their and not caring so much about the price because they know that the end is at hand. And we can see this in multiple views of the data. For example, this is the largest long only selling amount we have seen. So long only meaning all these, again, the big institutional funds. The long only meaning it's their prospectus makes them have to have a long only, so primarily long stock market going up strategy and positioning, right? They're legally held to that. And they have been selling. These long only funds have been selling. Largest long only on record. Another confirmation that the big institutional funds have been dumping, and they've been they've been dumping, but this has been dumping pretty bad And this is a skew, which we'll get into a little bit later, but that tells you that the offloading is accelerating. Now, before we go further, I do want to the the it gets crazier and crazier, right? So after the close, Trump posts this saying that he's very close to our objectives being met and that they might be winding down our great military efforts in the Middle East. Because one, they've completely degraded the Iranian missile capability launchers and everything pertaining to them. Number two, they've destroyed the industrial base. Number three, they've eliminated their Navy and Air Force, including their anti aircraft weaponry. And number four, never allowing Iran to get close. So, and number five, protecting at the lies their Gulf. Okay, so what's really interesting, and some people are calling this a Trump taco. And look, the stock markets exploded after Trump posted this because it basically was an off ramp, and him tacoing out is what the market was digesting this news. But here's the thing, and you have to really think this through here. He posted that 15 minutes after the market closed on a Friday. Now, if you look at all the other taco events where he caved in with China and the trade war and all that, all the other taco thing, it was never after the market closed on a Friday before the weekend began. It was always during the market that he would do the taco. And the reason why is because if you taco during the market has a bigger chance to explode higher, meaning the computer algorithms, the CTAs and everything else, and people will just buy because the markets are open. So the volume would be that much greater and the price increase, the jump would be that much bigger. So if you're going to taco, you definitely want to taco during market open hours. If you want to control and minimize damage, like strike Iran, you don't want to do it during the market hours. You want to do it right before a weekend, but right after the Friday market hours close. And that's when you'd strike, which is also what we've seen. All the military strikes would happen over the weekend right after the market closed so that you would have the entire weekend to digest the news. And so that by the time Monday rolls around, the news would have been digested, so the damage wouldn't be so much, memory recency, and the markets can recover on money. So that's the normal playbook. So what's very peculiar is that this post was done right after the market closed on Friday before a weekend began, which is the exact, and so Trump is not an idiot, and he's quite well attuned to the markets because that is one of his big marketing things, saying that the stock market is doing well. So for him to time this release after the market closed and not while the markets were open, especially on OPEX, which was from Friday, you definitely want to release this news on the end, towards the end of OPEX on Friday, right? With multiple quad witching going on. He didn't. And he's very well aware of this. And so that makes you have to take a step back and try to think about, well, why would he do the reverse now in timing of such a thing, which we'll get to. But that's something to keep in mind. And look, each one of these completely degrading Iranian missile. Is this true though? Because they're still launching missiles. In fact, after this post, they launched a missile way far out, which I'll talk about later, into a base that's on the South Indian Ocean, which was much further than they thought their missile capability, more than twice as far. So I don't know about that. And then the second one, industrial base, this one I don't know how to tell because they've moved a lot of this underground. So they may or may not, it's we don't know. Eliminating the Navy and Air Force, they did, but they're, how do you define their Air Force? It's not by planes anymore. This is the new warfares with drones and missiles. And I don't know if they really eliminated all their drones, for example, and never allowing Iran to get close to nuclear capability. Well, where is the hundreds of kilograms of uranium that's been, some of which has been enriched to 60% fissile capability? I mean, until you get your hands on that, who knows, right? Where they could easily build this up. Enrich it from 60 upwards takes only like a couple of weeks. And then the protecting at the highest level of the Gulf states, I don't know, they're still getting bombed. So it's unclear to me how their objectives are all met here or are very close to getting met. Of course, this offers the off ramp and essentially the taco capability. But again, as far as the reality goes, it's still the jury is up in the air. And I'm just being very, very objective here. So what happened was he releases. Look at the craziness, right? 2:30. Trump says boots on the ground. He was considering it. All right. CBS News says at 2:30. This is all on Friday. Then at 3:40, an hour later, he says, "No, I don't want to do ceasefire with Iran." Okay, we hit a low. I don't want to do a ceasefire. Then 90 minutes later, 5:13, consider winding down. Boom. So what is it? We're considering boots in the ground. I don't want to do a ceasefire. Then all of a sudden, considering winding down. I actually have a theory around how this whole thing. But as far as the stock markets goes, getting played, right? Like, this is just the stock market's getting totally played out. Now, one of the things that happened was Iran, it launched two missiles down, way down here to a base down here that was 4,000 to 4,500 kilometers away, which is more than twice the range of what we thought Iran was capable of. Now, one fell into the ocean and the other one was shot down by a US Navy warship en route to the base. But here's the deal. So what we thought, or what was generally understood, was 2,000 kilometer range. But now that we know they could reach up to 4,000, maybe 4,500, this radius of 2,000 is now 4,000. And if you go 4,000, I mean, you're now including Paris, you're including Germany, you're possibly even including the UK and London here is in range. So this changes the equation dramatically now, right? Iran is saying, look, we can strike way further up, including the NATO capital cities. And that's kind of a game changer. But let's talk about what's going on with this news because look, I just want to there's a lot of you have to be very careful here with what you see and read online because they will you will see facts and it's presented in a narrative that's, let's just say, it's manipulative. And I'm going to throughout this video show you how that people do that to whatever for whatever reason want to push a narrative that helps them. But you just got to be able to see through it because if you don't, it's dangerous, right? You could get caught off guard and it could be a bad situation depending on how you position yourself. But let's take this example, this Dagger Capital, let's say. So this person brings up, well, on March 20, 2003, U.S. sent ground troops into Iraq. And then right after that, the S&P, the SPY rallied 16% into June. And by the end of the year, it was up 20%. So today's March 2026, uh, if we send troops in ground, obviously what this person is saying is we could go up 16%. And that's technically true. This happened, right? So yeah, you go and look at that, it's true. And so you might think, well, that's good because there's market certainty, blah, blah, blah. That's why it's going to be good counterintuitively if US sends ground troops into Iran. So stock markets should go up based on because these are facts, which is a fact. It did go up, right? So you might think, oh yeah, why not? But what they don't tell you is March 20, 2003, that was after 36 months of correction. The market peaked in .com and we had 36 months, multiple years of downdrafting correction. 3 years, okay? So yeah, that was actually a pretty big reason why the markets bottomed because it already had been going down for so many months, in fact, so many years, that back then when they sent it, which is not the case now, we are not nowhere near 3 years of correction. We just started it. So you see, like, this is one example where they'll throw some facts at you in text or tabular format without the context of what was going on and say, see, that's what's going to happen this time. But it's not, right? This time, it's not the same setup. is a completely different context. And for you to blindly just say, well, that's going to happen again, because is you're totally missing the point. You're looking at the elephant with like a microscope, and then you're like, see, and then you're like completely missing the big picture of the elephant itself, which is huge. And so you got to be very careful. I'm going to point out a couple more examples of this type of stuff, but you just got to be careful when you're waiting out there and listening and seeing and all this stuff, because again, if you're not careful, you can get taken and it could hurt a lot. So that's just one example of what I was talking about, right? Like, as if, of course, after 3 years of correction, when you send the troops in their certainty, it could go up. Sure, that's not what's going on right now. So then you get people saying like Jim Cramer, "We're very oversold." Yeah, very oversold. Look, by the way, this is logarithmic, okay? So you can't say that this is arithmetic, but it's logarithmic scale. Are we really oversold? Okay. Like maybe like if we do this, we're oversold, but are we really oversold? I don't think so, my friends. I really don't think so. Just keep that in mind here. Now, here's another example. Okay. People saying, look, this Friday is a bottom. Why? Because look at the volume. Look at the volume. Every time volume goes up, if volume goes up, it was we boom after, volume goes up, boom, because that's capitulation. Everybody sold out. So now we're gonna go boom up. And this post had almost 100,000 views. And again, this is technically true. Absolutely technically true. Absolutely. But again, it, that chart starts right here and going forward, meaning the whole bull market boom up, right? Is what you're looking at. But look, if you go back a little bit, we had quite a big boom over here, and guess what? We went down. But of course, you conveniently leave this part out and you just show it here. So by shrinking the time, you get to manipulate what you're showing to people, and you say, oh, boom now. So every time, boom, 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 we go up, right? But what about the boom here? No, it didn't boom up, boom down. So by selectively showing time horizons, by selectively showing tabular data, you can any statistician will know and tell you this. You can manipulate data by formatting it and including or not including different parts of the data, the window of what you're showing, to paint a narrative, to and it could be anything, literally. It's why politics, right? Politicians do this really well. And you can't argue with them because technically the data is correct. But the narrative that they spin that's where it gets, and then you argue till like a religion, you can't prove it. This is what I mean. In in the context of just the rise, yes, you're correct, but in the context of where it was correcting, no, it wasn't. We went down. And look at where we are. This is not, we're not anymore in this rise. This has shifted. This is not a small little thing where we continue to go up like these little corrections over here. We have a rounding top that has developed. And now this is a different scenario than this. You got to apply this scenario where it also started rounding last March, leading into the April trade collapse. That's what is more relevant. And now we're in here, and now this could actually go up. We could, after doing this, do this. This could totally, we could have this happen. That is something that if you paint this picture the wrong way, you're gonna miss, and you're basically misleading. But why'd you cut this out, my man? Right, my man? Why'd you cut what happened out before here? Come on, keep it real, guy. 100,000 views, 100,000 people getting confused here. Watch out now. People saying, well, the volume has went up. Look, this is the reason why I look at the ES and not the SPY ETF or not even cash SPX. I look at the ES for a very particular reason. And I'm not going to recap. I spent multiple episodes explaining why, but basically one of the main reasons is it shows you continuous market price action, because overnight price action counts. And it's only the weekends where you have the gaps, so the gaps are narrowed. And while the overnight price action volume isn't that great, it still is volume, and sometimes the price action overnight is a lot more than what happens during the day. And during the day, the price action isn't skewed too much to just big institutions, whatever, buying the ETF, because futures are where plays futures, right? They're less retail playing futures. For retail mom and pops, a lot easier to just buy ETF. Futures is where more of the professional traders play because number one, a futures contract costs a lot of money, unlike a single SPY ETF, for example. And so that's why, and there's a lot more reasons, but those are some of the basic reasons why I look at the futures market or the ES. And if you look at the ES, the volume, yeah, is you know is nowhere near. You didn't have those capitulation spikes, no, and the overdoneness, the oversold, no, we're nowhere near, right? Look how much more of this. If this turns into the aqua line, meaning, okay, now, there's velocity and accelerative selling like we had here, then yeah, you could be starting to look for some kind of a bottom. It's not even aqua here in the RSI. And then the MACD, we're nowhere near how low it went before. We're nowhere near. Meanwhile, we have clearly broken the Wyckoff distribution rectangle. And so, uh, does that mean it's gonna be a straight line down? Oh, hell no. Like, nothing is ever a straight line down, even on the way up, and this was a massive rally. We've had corrections. Even here, which is pretty much a straight line down, we had correct look, this one. This is a big it went almost to where it was up here, right? So, we could do that as well. In fact, what I do think is gonna happen is we're probably gonna do a little bit of this, right? And this now, what was support multiple times now becomes resistance. We clock it, it's resistance, and we get batted down. So absolutely, it's not going to just go straight down every single minute of the day. Hell's no. But does that mean this is the bottom and we're going to go up to new highs? The chances are that's unlikely, right? Not on the way I see and the way I look at data. And I'm neither bull nor bear. I just want to make make cash, right? So I don't have an agenda of being a bull or a bear. I'm completely objective and looking at in a very neutral way because that's the way you want to position yourself. Now, if you've been watching I showed this chart a couple of weeks ago as well. Everyone's saying like put delta positions. So the number of puts, everybody's short the market. So when the market's short, that means it's going to explode because it's a contrarian indicator. Because every time everybody's short and on one side of the boat, that means, when the moment that happens, the market can explode higher because there's a lot of short covering. Well, that didn't work out, right? Because we kept going down for the past couple of weeks. Just because we're short doesn't mean we can go short more. And usually when it does that, that's when the big collapses happen, right? I'm just telling you. We're also in a VIX backwardation. So until we normalize, because this is not normal. Big VIX backwardation, meaning there is much risk priced into the near term of the market, because this is the opposite of what the curve should look like. The curve should look like this, meaning as you go out in time, uncertainty goes up higher, and thus the VIX goes up higher. And that's just common sense, right? Because you don't know what's going to happen in October. So, because that's just further down the timeline. And so, uncertainty normally goes up with the time horizon. But now we're the reverse of that, meaning it's more uncertain in the near future than in the far future. So just remember, until this resets back to its normal curve and we remain in backwardation, no bueno. All right, no bueno. That's why I'm gonna. I mean, let's see. But until I see it reset, nope. And just, I don't want to harp on a dead horse, but look, JP Morgan, Cliffwater, Morgan Stanley, Blue Owl, BlackRock, Blackstone, liquidity, private debt, this thing is not good. This is still there, right? Again, it's been masked. This is a big problem that's just been masked by all the Iran headlines. But it's there, and look out when that shoe drops. It's already dropping. It's just been covered, if you ask me. Now I want to turn the attention a little bit to gold here because gold had the biggest, okay, weekly drop since what? the 80s. Now that's a very big move for gold to go down that much, and also silver. And there are a lot of reasons. Now, if you've been following me, I've had that episode a couple of weekends ago when the war first broke out of how gold went down instead of going up, which to some people is a little bit counterintuitive because gold is a safe haven. So if war breaks out, gold should go up. But the reverse happened and continues to happen. And this is exactly why, I'm not long gold or silver, the precious metal. I avoided that whole crash. Instead, I've been long oil and making cash, going long oil and trading around that. But this is a pretty big move. And if you remember back on March 18, I said, look, we hit the P bar in GLD, right? It took a little bit longer. Instead of 10, it was 14 trading days, but that's okay. I wasn't trading this. I wasn't like, there's a couple of things I don't do. One of them is I don't short gold or silver, but we hit it. But basically, when this P bar came out back on February 27, I was like, I'm out. I'm not doing long gold anymore, right? I took profits, cash. I'm going to deploy cash elsewhere because as crazy as it looked like I mean, back then it was crazy. No, you saw this and everyone was like, that's crazy. No way, gold's, we just went up. It's going to go up, up and away. Why would it crash all the way down there back then, right? This was before the Iran thing. But I said, look, I'm not going to argue against this. This happened. It's okay for me to miss this because I don't want to miss, I don't want to get hit by that, right? I don't want to go up and catch that only to get, so I was out, right? And lo and behold, this happened. This is some of the ways I make stash and then I protect it. So I avoided that whole thing because of that P bar thing. And I mean, man, I mean, this is a crazy move down, right? I mean, this like twice the size of that P bar. So I completely avoided that, and I also shared, you know, why. So if other people read that and incorporated it into their own analysis, kudos to you as well. Now with silver, I also updated this. Now, if you remember, I was watching how silver was looking like it was kind of copying what happened in 2011. Now, I just want to again be very clear here. I'm not doing a one-to-one overlay. I don't like it when people do one-to-one chart overlays. What I'm doing is there's a central pattern, which is the blow off top pattern, which is usually followed by a second lower high, sometimes a slightly higher high, but usually a lower second high and then the collapse. That's the obvious and main pattern that's been back tested. People know about this pattern. And that central pattern has multiple renderings of it in two different time periods. So that's what I'm comparing is really the rendering of a central pattern, not just some two random charts on top of each other. So that central pattern played out in 2011, and I thought it was also playing out in 2026 because we did have that blow off top. And so the update that I shared with people days ago was that look, in 2011 we had the 1, 2, 3, 4, 5, after which we had this 6, 7, 8, with 8, the key here being a lower high, not as high as 6. And after 8 happened, this massive move down to 9. And in 2026, we kind of did that. We had 1, the first low after the crash. Then we had a reactionary bounce, which was 2. Then we had another low after that failed dead cat bounce, the initial one on 3 here. After which we had a rally to a number 4, and then we kind of revisited back the lows, which we kind of did here, and then punched out a 6, a 7, and 8. But here's the thing, 8 now is a lower high compared to 6. The lower high compared to 6. And what follows is a big, massive drop to 9. And so I was like, look, if this is true, we are going to get a very bad drop into 9. A liquidation thing that's, just as bad as the initial crash. And that's kind of what unfolded. So again, just some stuff I've been sharing and also helping to guide me how to stay out and avoid big drops. And look at gold. I mean, the price of silver, man. I mean, that's a pretty big, that's equivalent to that happening again. And look at where we are here. We're back into the low, which it tried to bounce, it's trying to bounce. But if this breaks, this support, if this breaks, right, maybe a little bounce and goes down, that is really no bueno. That means we could easily go down to 50s And if this doesn't break, do one of this, easily go into the 40s. Now, if we get into like this 50-40 zone, that's a pretty good. I mean, we were at buck 20, right? So that's a huge drop from a buck 20 down to 40. That's like a Bitcoin drop back to same kind of thing. I'll be looking to accumulate here at this price again. Perhaps the physical, but I don't like physical for silver because you kind of have a lot of it. So, but maybe for more so for gold. And if we look at gold, we're in a similar setup again, right? Down here and down here. So boom, if this support, this line doesn't hold, the previous drop easily go back down. Now, if gold goes under 4,000, this is where I might load up again on some physical bars like I had before for the long haul now, because that means we would have had at least that initial correction, which I was the whole reason why I got out of my earlier physical bars was to be in paper so I can avoid all this while making money. But if we go back down in the 3,000s to gold, might be time to get some physical again. Not to trade, but to hold for the mega problem that we're going to have coming forward. And this has been, again, so another thing, this has been going around online. People are saying, look, if people buying calls at 20,000 gold, 12,000, this is a pretty significant volume now. 20,000 gold price, wow, people think and it's true, that happened, that's data, but that doesn't mean people are thinking it's going to go to 20,000 gold right now, which is a nice headline grabbing viral thing to post. But the way that was probably executed was through options. And if you know how options work, you don't have to have that price hit. It could just go up, and your options, your position has more value, which you can unload. And you can unload that depending on how much leverage you took for a huge gain, even if it doesn't go to 20,000. So that's just a kind of an options play, right? Doesn't mean we're going to hit 20,000. That means that there is a bet that's going to go up, but not necessarily to 20,000. So just keep that in mind, right? Oh, we're going to go up. I'm going to load the boat to 20,000. Like, no, that's not it, right? That's an options play. Okay. Now we're going to talk a little bit about oil, because I mean, this is I get remember that avalanche clip I showed you the last time? We're still in that mode, or we're just looking at the avalanche coming down and realizing what it's going to do to us. Now, the head, okay, the IEA, the International Energy Association, these guys kind of know something about energy, okay? They're the Global Energy Association. Comes out, the head of that organization comes out and says it's the greatest threat to global energy in history. Okay, the agency head says that. And he's saying that the recovery of oil and gas fields could take more than 6 months. I don't know how I mean, these are the experts. I mean, that's all they do is energy, right? Before this whole Iran war started, and now everybody's an energy expert. Just like in COVID, after COVID started, everybody's now a flu and virus expert. No, there were experts way before you started doing this. And they know a lot, have a lot more experience, because that's what they've been doing for decades of their life. It's their specialty. These people are coming out and saying, this is the biggest energy crisis in human history. Okay? Let's just let that sink in, all right? This is not some rando who became an expert all of a sudden because of the Iran war broke out saying it. This is the head of the organization that manages energy for the world saying it, and he's the head. I'm sure he played politics to get up there, but you also have to know something about energy to get up there, right? You're not some like bodybuilder who did politics to get up there. And so this person comes out and says that, and he's saying the disruption of supply 6 months. Forget about the Strait of Hormuz and all that. That's the transport part of the equation. We're talking about the production, the taking it out of the ground and making it shippable. Those facilities are busted, and it could take up to 6 months to get back to where we were. That's half a year. So even if the war started yesterday, or sorry, if the war literally stopped yesterday, it would still be from yesterday 6 months forward. that the production would be back to where it was. And that's the best case scenario according to him. It's probably longer than that. And that's assuming nothing more happens. Guys, it's the avalanche, right? We still haven't. Now, now, keep in mind, this chart is since 1986. Again, remember what I said? So there's more before 1986. But even still, having that knowledge, look at this. Crude oil price surge in since 1980, which is a long time, right? That's 40 years ago, almost 39 years ago. 40 years ago, 86. Never seen crude go up like this. This is not what we've seen before, right? This puts it into, and anyway. So what does that mean? It's not just these experts, it's also company CEOs. So who is this? This is CEO of United. And what is this guy saying? Well, when was this released? This was released March 21. Okay, so just yesterday, the other day. Look what he's saying. He's saying plan for fuel being higher for longer. How much higher? $175 per barrel. And doesn't get back down to 100, which still is not good. He's making sound like 100 is good. He's saying it doesn't get back down to 100, which is still really, really, really not good, until the end of 2027. So that not the end of 2026, the end of 2020. So end of next year, it's going to not get back down to a bad level, which is 100. Okay, he gets it, and he has to get it because he's the CEO, and he has no choice. But when the CEO of a major airline is announcing that publicly on their website, and then you also have the head of the International Energy Association itself saying this is the worst ever in history of humans. And then you're just sitting around there, la, 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 it's not that bad. Hey, man, this is the avalanche. The snow is coming down and you're still there taking a selfie and not running away. That's what's going on, guys. That's exactly what's going on. Now, I want to also I've talked about the SPR, which is the reserves of oil that we have. But just because we're releasing, that's why oil's gone down a little bit. But just because we're releasing, look, one of the things you have to, I talked about how thick or thin your wad is to let you got this much oil, but if it's not thick enough, you can't get as much oil out. It's going to take a long time. So the throughput and matters, right? Doesn't matter how much big a tank you have. If your little thing is so tiny, it's going to take forever to get that oil out. And that's not going to help with prices because they need the oil yesterday. Now, it's not only just that, but what they're saying is you got this much oil. Well, this much of it you can't take out because if you take that out, the infrastructure stability blows up and the whole thing could collapse. So they call that the roof oil. 172 million barrels. You can't. You can't. You need this much. 150 remain in place to preserve cavern stability. Otherwise, the whole thing might collapse on itself. So just keep that in mind. You have less than you think you know. Now the U.S. comes out, and so Trump and Besson came out. Besson came out and says, "Look, we're going to allow Iran to sell oils. We're lifting sanctions." And you got to understand, why is the U.S. saying it's okay for Iran and Russia too to now we're lifting the sanctions. Now those two countries can sell oil in the global markets using the petrodollar and dollars. Why would they do that? Well, it's because they know they know the dire problem we're facing that I've been talking about with the IAA and even the CEO of United. They've been told that. They know. They've been whispered that reality into it. So they know how bad it actually is, even though it's not reflected into the market yet. Well, at least not the Western oil price markets and stock markets yet. And so they're trying to release as much oil as possible, lifting sanctions and at a high political cost, right? Because those sanctions were there for a very political reason, but they're lifting it out. So that tells you, right? They're spooked. They want as much oil in the global markets as quickly as possible. And that also takes away any thought of the US restricting oil to the global markets, because why would they? That would go against them lifting the sanctions so that Russia and Iran can add more to the global supply. Why would they restrict them? No, they want to export more so there's more in the global market. So the hit won't be so bad once the avalanche hits, because they actually see the avalanche, unlike most of us. So that's why the US won't restrict oil, which means that the price of oil, WTI in the West, USO and all that, probably isn't going to collapse for that reason. Anyway, what did Iran say? Well, they said, no thanks. We have no surplus oil to So it's a big middle finger they gave, right? Like, oh, you want to sell? No, we're not selling. We got no surplus going to China. Sorry. Okay, now for all the tacoing that Trump was talking about, there is very, very, very solid information that there's more Marines and warships that are heading to the Middle East. There is more heading to no question. The Pentagon, CBS, Wall Street Journal, many news outlets saying, look, they're sending more to the Middle East. And here, Saudi Arabia sees a spike of oil to 180. If energy persists past, think it's not going to persist past, I already told you. The shock is definitely past. It's 6 months. It's definitely past. Again, if the war ended yesterday or last week, it's 6 months from last week. That is already past April, which is just next month. 6 months. The war would have had to ended 6 months ago. Well, it would have had to end in what, November of last year for past April to work. I mean, I'm just telling you, man. Even Saudi Arabia sees people who know, the people who actually supply stuff, they know what's going on. But make no mistake, there is this sending of Marines that is happening as I type and speak right now. And this from CBS. Heavy preparations for potential use of ground troops in Iran. And he says this. Oh, I'm not putting troops anywhere. But then look at what's going on. So they submit specifically in preparing for such an option. So just keep in mind, the current administration, President of the United States, what he's done in the past, he's negotiated with Iran, and in the middle of negotiating, they bombed Tehran and Iran. Twice now that's happened, right? Oh, let's negotiate. And then in the middle of the boom, and assassinate the negotiator. That happened twice. Then even with the B-2 stealth bombing of the nuclear facilities, remember he was like, oh, Iran, 2 weeks, I'm going to give you 2 weeks. Remember he said 2 weeks? And then what happened the second day after he said 2 weeks? They bombed. So this stuff where it's like, oh, we're not going to say, oh, we're going to wind down. Oh, he's already shown at least 3 times specifically with Iran, just Iran, forget about all the other countries, where he said stuff and then the exact opposite happened. So he says stuff for headlines, so woo, let's goose the stock market, and then also to throw the adversary, in this case Iran, completely off guard. It's not going to work, I don't think, because Iran's already seen this happen multiple times. So they're not going to, it's like the boy cried wolf, and they're not going to get suckered the 4th time in a row. They see what's happening, right? They know that the troops, the ships are heading there. Like I described in my last video, they're going to try and take over and enforce the Straits of Hormuz and Kharg Island, which is a suicide mission. And I don't think, I'm just sad because people are going to die when that happens, unfortunately. And a loss of a human's life is a loss of human life. But unfortunately, that's what I think is going on. So whatever is being said in the media about tacoing or not, this war is going to end soon. It could end soon, right after they go put boots on the ground, take over Kharg Island and set the Strait of Hormuz. But remember, there's the Red Sea Strait. The Houthis said they're. I don't talk about that. Yeah, take it with a grain of salt. Now, so CBS is saying that the 82nd Airborne Division's also, these guys they're elite paratroopers. They fly in and drop down. Then we've also The U.S. is also sending amphibious attack with the other Tripoli warship, which is a light warship, meaning it has lightning strike F-35s that do VTOL or vertical takeoff and landing, along with the Marines on that ship, plus the 82nd. They're going to parachute and do amphibious. That's what's happening. Now, this also came out. The Houthis, okay, the Yemen is saying, look, we're coming out. Vowed to target selling in their waters. They haven't done it yet, but now they said, look, watch out. We're gonna, and this battle is for the Ummah. That means that, in Saudi Arabia, they close the Strait of Hormuz, the Red Sea, they're gonna shut that down. Once they shut that, and then you have the Suez Canal is the only, and they bomb that one, then you're toast. That's it. So meanwhile, remember I talked about Iran allowing ships to pass if they pay the oil not in dollars but in Chinese yuan or yen. Well, that's happening, and Xi Jinping comes out and said, "Well, the Chinese renminbi to attain global." It's already beginning to happen. In fact, there's already been news that Iran has let some oil tankers out because they agreed to settle the payments in yuan, not in U.S. dollars, and that's how they were allowed, either the Indian or Japanese. That's the latest word. So you got to understand here, Iran, and it's not about stopping the flow of tankers, even though the flow of tankers is still pretty much negligible compared to what it was. We're still in like under 10% normal flow. But Iran's goal is not to unless they get into this all-out battle, like Armageddon, their goal is not to stop flow completely through Hormuz. I don't think they want to, unless they feel like they're going to get plastered and taken and just bombed to smithereens, and then they decide to take the world with them. That's not their goal. Their goal is to be the one in control of Strait of Hormuz, and that is something they have achieved. They control the Strait of Hormuz. That they were not in control of Strait of Hormuz before the war. Now they are. This is a huge win for them because now they control a hugely strategic, economic, and also geopolitical, but more so financial economic choke point of the global economy that is now in their control when it used to not be. And this is a major development for a country like Iran to control a huge knob and now they can dictate however they want because they control it. You got to pay in yuan, or you got to pay 2 million a pop to pass, and whatever they can set the thing. And so this is a huge setback for the American petrodollar setup and the rest of the hegemony of the old way of how global finance worked around the precious commodity of oil. And it's not just oil, like I said, it's all the other commodities, helium, ammonia, and everything else. So this is a huge development for Iran to take control of a global choke point and then be able to what they want with it, which is great for the BRICS and China to say, hey, now paying yen. Yeah. So this is a big development, and it's a huge loss, at least technically from the financial and economic standpoint of the Western Hemisphere. I mean, there's no way around that unless they reclaim the Strait of Hormuz and take back control of it. So that's why there is this incoming battle. I do think that's going to happen. It's too huge an economic node and choke point to give up control to Iran. It is just it's too big a loss for the Western hegemony. They can't do that. They need to take it back. And then, Trump says he's gonna, the Gulf states we don't need it. The rest of the world can fight for it, and we'll help if they. That's again jawboning. There's absolutely you need to control it. You need to protect the petrodollar. You can't have oil being sold in yuan. That's a threat to the financial hegemony. No way, right? They need to take control. So no matter what that reality of giving control of such an important choke point to Iran, no way. That cannot happen for the Western financial system. Forget about whether or not you need oil from there or not. Now, I'm not going to harp on this, but look, 42% after 4 years. And this from Goldman Sachs. Okay, let's just move on because there's no It's a dead horse. Now, as far as USO goes, which was the instrument I've been trading, you can see how it's in this tight range. And this is a managed and controlled. I do think this is being, every time we get to the top of the range, there's been selling, selling. And so the strategy that has worked very well for me and has made me a lot of returns is basically when we're at the bottom of the range, I accumulate and buy. And we're near the top of the range, I sell. Buy, make profit when you sell. Buy, make profit when you sell. So that's what I've been selling when we get up here. I was buying again when we were down here. We kind of went up on Friday, sold again, and then we might go down. Once we can reach down here, buy again. And but this is something you can see that is, I believe, a very managed price, basically. And this price actually translates to $100 in WTI. So they're trying to keep oil under 100. That's like the line in the sand. And whether it's the US Treasury or whoever, there is action going on to keep a lid at 100 on WTI, which is also translating into the instrument I trade, which is USO. And it's a very clear pattern here that's worked for me. And until it doesn't work, that's what I'm going to keep doing. Now, I want to bring up one more thing here. Sulfur used for fertilizer. 45% of the earth comes from here. So that means it's not just oil, food. Now, last news I read is Iran's letting some ships with fertilizer related resources to pass because they realize Iran's realizing if they don't, we could have famines in the world. And again, this is like months down, right? So you don't see the damage right away, but they were able to see that we have this potential famine thing happening where food prices, there's no food on the shelf type of situation in many countries. I'm not kidding. Like that is they so they don't want to have the rest of the world go into like famine, so they're letting some go. But that tells you that the farmers, not in just in the eastern side of the world, but even in the west, the US farmers, they don't have fertilizer. It's affecting their crop strategy and plans. They can't plant without the fertilizer. It's already happening. This is a very dangerous thing. And so even Iran's sending it through. But I don't know, the damage might have been, at least some damage to increasing food prices has already happened, just like with oil. We just have, it's still months away, right? Because oil takes a long time to ship and work through the supply chain and all that. But in a few months from now, you're going to see some of this problem. Just like we said, oh, inflation not going to happen with tariffs, or rather, inflation is going to happen. It didn't happen immediately, but now we're seeing inflation creep up. Didn't go down inflation. So here's an important chart I want you to take a look at. And this, uh, okay, from Refinitiv Data Strategy. I just want to give credit because this one is, look, every time we've had retail oil price go up by 50% since the 70s, okay? So 50 years, 56 years. Every time it's gone up 50%, we've had a recession. 50% recession. Gray bar is a recession, right? 50% increase, recession. 50% recession. 50% recession. 50% recession. 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 50% increase. What do you think's going to happen? I've showed you many versions of this type from completely different backgrounds, right? From the unemployment numbers to the uninversion of the yield curve and long-term and short-term, Fed interest rates. So many ways. Look, and there's always a recession. Now, here's one more, but this one was a recent one because so in other words, if all the others weren't bad enough, right? The unemployment, the yield curve and inversion charts, and all that I showed before, where there's always been a recession. Now we have, with the development of this war, another one that is 100% accurate over 50. Whenever price of oil, forget about all the other stuff that was going on, just from an oil perspective, goes up over 50. We had a recession. We just had oil over 50. So now it's like, dude, this is like super duper duper, we're gonna have a recession, right? There's so many things. It's not just a recession though, because inflation is going to go up at the same time, because usually there's some kind of deflationary forces with recession. But now we're looking at inflation at the same time. So it's the worst of both worlds, which is some kind of stagflation, which happened in the 70s, which is really painful. But now the 21st century version of it, which is, I think, is actually even worse. Now, What happened last week? Well, what happened this year? This is the USGGB01, which is essentially the expectation of inflation, which has skyrocketed. Inflation expect no, this before the war. Okay, before the war happened. The expectations for inflation already started creeping up at the beginning of this. Remember the whole tariff, oh, there's no inflation. Then all of a sudden people are like, oh, actually, we might be getting inflation. Because there is this lag effect. And in this TikTok, 2 second attention span world, we never think past a couple of weeks or even months. But here we are, and it's skyrocketed again now because of the oil situation and everything else like food and all the other resources getting constrained. This is not good. The influence. This is we're expecting a ton of inflation, this tsunami of inflation to come, and it's money's behind this. That's why it's trading this way. This is based off of U.S. Treasuries. So what I did was I couldn't find the latest chart, so I just went into TradingView and just showed it. But the bluish one is the double top inflation in the 70s. Remember in the 70s we had the initial spike in inflation, they raised interest rates, so it went down, but then they got too complacent, and then we had the oil shock, and then it just did another big spike. Well, in the 2020s, which is the red, this is what we did. We had this big spike. We raised interest, it came down, but again, it's creeping back up, and now it's probably going to go back up again, and we're probably going to do just because the inflation expectations are going up. So if what I just showed you in the other chart manifests, and the inflation expectations are, so this is like spot inflation. What I just showed you is future inflation. If that manifests, look, we are already stopped with the downward movement. We're already starting this upward movement. We are probably going to go back up. And that is terrible news. If you combine that with a recession that's about to happen with, you're just basically getting poorer and then having no jobs and everything slowing down. This is terrible. Right. So traders now see a chance of a Fed rate hike at over 50%, which was earlier this week, it was literally at zero. Right, there's a 60.4% chance the Fed will move towards higher rates by October based on Bloomberg data. This came out on March 20. And of course, why would you ever raise interest rates? This is part of the reason why gold and silver are going down, because when interest rates go up, it goes down. There's a good discount to accumulate more. Well, it's because inflation is going up. So if inflation expectations are going up, they're going to raise interest rates, which is going to be very bad for, it's going to slow everything down. Forget about mortgages in your house. Everything's going to go up, right? Forget about trying to sell your house at whatever price you think. No, interest rates are not going to go down. They're going to go up, not down. Now, if the economy collapses and we have a panic event and we have a stock market crash for the ages, of course the Fed's going to cut interest rates. They always do. And then we'll have an interest rate cut. But that will make it even worse, because that'll make the inflation genie even go up higher. And we'll end up with an even bigger. So you see, there's no way out there's no way out from this. It's just pick your poison. It's all poisonous. It's just which poison do you want to ingest to capitulate. That's what's going on. It's really not good. And if you look at the long-term, U.S. Treasury rates, I think this is the great Martis guy on X who put it. But this big cup and handle, and I like cup and handles. We just broke out of the handle. If this is true, we could go up. We're talking about 5.5% on the U.S. 30-year. Forget about your mortgage rates. Everything's going to go up. And it's not just the U.S. Look, Great Britain, 17-year high. It's a lot of Japan, 30 bond year. Look at this. These are yields. They shouldn't move like meme stocks, but they are in the past 5 years. And Japan is yen carry trade on wine. Watch out, because look at the Japanese yen. Every time, these are interventions, because it's at that 160 level where things start to break in Japan. So the Japanese central bank, the Bank of Japan, has to come in and intervene to shoot this down, right? The last time they intervened was back here. We're back up here. They're going to have to intervene again. But this is not good, because these interventions introduces shock, and Japan might have to also raise interest rates. And that might end up being with more problems, more potential risk for another yen carry trade unwind scare, and then disorderly one at that, which could again tank the stock markets, along with all the pressures for the private debt bubble collapsing and whatever the heck is going on with, with Iran and the oil and all the headline news there. Reality finally like settling in with the avalanche. So you see where we're heading. This is, this is not just doom, gloom, and boom type of talk. I mean, this is just reality of what we're facing, showing you the data. You best be prepared of where we're heading. And even if we don't go in a straight line down, you see the general trajectory where we're heading. These are not good times for definitely the next couple of years, I would say. And the last thing I'll just leave you with is the chart on Bitcoin, where it looks like we're repeating this, a big move down by this, and then a slightly higher, and then move down, big move down, and then two slightly higher highs, move up with then a move down. So, if Bitcoin goes down onto under 50s into again, just like gold, can be accumulating a little bit more. So that's all I have for this week. I think next week we'll probably open up the Discord server for maybe a couple hundred joiners. The last batch who joined, I think I've settled in, and we're again a happy community, and everything's firing off really well there. So be on the lookout for that. Subscribe and hit the bell if you want to get notified, because we just open up a certain number of seats, and it's just first come first serve. And of course, there's nothing being charged to anybody. It's just a community of like-minded people trying to learn and share information, knowledge with each other. So having said that, let's see what happens next week. If something crazy happens, I might do a midweek banger. But this situation's. I mean, by the time I finish this recording, who knows? Some other crazy thing might have happened. So let's see how it goes. And thanks for watching. I'll see you in the next episode. Peace out.